Assalamualaikum. Hi, I am Mohd bin MASHUDDIN.
I am BRYAN KELVIN KEFLI.
I am BATRISYIA binti BAKAR.
And I am HAFIZ bin SAPAWI.
We present to you financial ratio of SASBADI and PELANGI Group.
Nod my head, don't close my eyes. Halfway on the slow move. It's the same way you showed me. If you could fly, then you feel south. Up north, getting cold soon. The way it is real.
Liquidity ratio. We will present the current ratio of both company. This image displays the current ratio of Pelangi Publishing Group BERHAD and SASBADI Holding BERHAD for the year 2016 through 2020. Current ratio demonstrates how effectively a company can satisfy its short-term commitments. As you can see from this graph, as a result, SASBADI is more liquid than Pelangi. It is because these companies have current ratios greater than one of these past 5 years. As you can see that stated in this paragraph, this indicates that the current ratios of current asset of both business exceed their current liabilities. Next is quick ratios of both companies. This image shows that quick ratios of Pelangi Publishing Group and SASBADI Group. A quick ratios can be defined also as an acid test ratio, which is show the excellent progress of a business. As you can see that stated in this graph, it is show that if a company quick ratio is less than 1, it means that it doesn't have enough cash on hand to cover some of their present debts. This is a sign that this company have a trouble with money. For all over 5 years, the table shows that both subsidies and Pelangi have a quick ratio above 1. In other words, both business have more cash on hand than they have an O right now.
Next is the leverage ratio. We use formula debt ratio and time interest ratio. So the calculation involves the division of the net debt of the corporation by its shareholders' equity. A greater net debt to equity ratio signifies a higher level of leverage for a corporation. This implies that the corporation is more dependent on debt as a method of funding its operational activities. The bar chart illustrates a continuous pattern whereby Pelangi's net debt to equity ratio surpassed SASBADI over all 5 years. This implies that Pelangi display a higher degree of leverage compared to SASBADI. In general, the bar chart indicates that Pelangi exhibits a higher level of leverage than SASBADI. This issue raises worry because of Pelangi's heightened susceptibility to interest rate hikes and economic contractions. For the time interest and graph tie, the tie ratio is meant to show how well a company can cover its interest cost with its profit before interest and taxes EBIT. To figure it out, we divide the amount of interest paid by the amount of profit before interest and taxes. If a firm has a tie ratio, it means that it generates a greater amount of EBIT to cover its interest expenses. As a result, there is less risk of the corporation being unable to pay its debt. If a corporation has a tie ratio that is less than 1, it shows that the company does not generate enough EBIT to pay its interest costs. This is indication that the financial situation is unstable. According to the data, the tie ratio for SASBADI has been continuously greater than the tie ratio for Pelangi across all 5 years. This indicates that SASBADI is a better financial position than Pelangi to meet its interest payment obligation. This is due to the fact that SASBADI has higher EBIT in comparison to the overall interest expenditure it has incurred. The tie ratio for SASBADI is likewise regularly higher than the norm for the industry.
The graph demonstrates that SASBADI return on asset has continuously been greater than Pelangi's return on asset during the last 7 years. This suggests that SASBADI has been more efficient than Pelangi in earning income from its asset. For all 5 years, SASBADI return on asset has been more than the industry average of 5%. Lastly, for return on asset, we can see that SASBADI has been better at turning its asset into profit than Pelangi due to the greater return on asset. As you can see from the graph, SASBADI return on equity has always been better than Pelangi's for all 5 years. For this reason, SASBADI has been better at making money of its stock than Pelangi. For all 5 years, SASBADI return on equity has been higher than the industry average of 10%. This makes it sound like SASBADI is a well-run business that has a lot of competition in the printing business. Overall, for the last 5 years, SASBADI return on equity has been between 12 to 15% due to the high return on equity that shows that SASBADI is making a good amount of money from its investment.
The table shows the fixed asset turnover of SASBADI Holdings Berhad and Pelangi Publishing Group Berhad for the years 2016 to 2020. Fixed asset turnover is a measure of how efficiently a company is using its fixed asset to generate revenue. It is calculated by dividing the company's net sales by its fixed asset. A higher fixed asset turnover indicates that a company is more efficient at using its fixed asset to generate revenue. SASBADI fixed asset turnover has been consistently higher than Pelangi's fixed asset turnover for all 5 years. SASBADI is able to generate more revenue from its fixed asset than Pelangi. This is a positive sign for SASBADI's long-term financial health and its ability to generate profits for its shareholders. This can be due to a number of factors such as the company's strong brand recognition, its high-quality product or services, or its efficient operations. For example, SASBADI is a strong brand recognition is a competitive advantage. To get a better understanding of the financial performance of SASBADI and Pelangi, it is important to look at other financial metrics such as the profit margin and return on equity of each company. The table displays how much SASBADI Holdings Berhad and Pelangi Publishing Group Berhad have sold in total assets from 2016 to 2020. The amount of money a company makes from its assets is shown by its total asset floor. It can be measured by dividing the net sales by its overall asset. A business that is better at using its asset to make money will have a higher total asset turnover. One reason for this could be that the company has a well-known name, offers a high-quality goods or services, or runs its business smoothly. Overall, the table shows that SASBADI has been better than Pelangi at making money by using its asset. The reason for this is that SASBADI total asset change is bigger than Pelangi. To sum up, SASBADI Holdings Berhad and Pelangi Publishing Group Berhad are two of the Malaysia's best publishing companies. Both SASBADI and Pelangi have a history of good financial success, but SASBADI has regularly done better in terms of cash, revenue, and efficiency. Consider the fact that this study is based on a small amount of data. When making a financial choice, you may also want to look at other things. Last but not least, keep in mind that the past doesn't always tell us what will happen in the future. Thank you.
Make sure